Hey, I'm Jason, the Mortgage Smith, and this is Rio from the Rio Deal. And we're going to talk a little bit about buying a house when you're contingent upon the sale of your home. Get a lot of buyers that are nervous about that. How do you handle that, Rio?
Yeah, man. So thank you for having me. I appreciate that. What are some of the concerns that sellers have? Because there isn't many sellers out there. That's why we are in this market that we're in, which is, a seller's market, right? So sellers aren't wanting to sell their houses for a lot of different reasons. We'll go over some of those reasons. But how we can kind of put their doubts or how to put them at ease with that process, right? So one of the biggest concerns that sellers have when they're selling their house is, how are they going to find their next home, right? So that's a big issue, right? So it's like, well, I know it's easy for me to sell my house as long as you price it right. That's key, and we'll talk about that. But it's like, well, what about when it's my turn to then go and buy my next home, right? What does that process look like? So one of the ways that I offset that, and the conversations that I have with my clients is, if you price your house right according to the condition of the house, it should absolutely sell that weekend in this market, and you should have multiple offers. Regardless of the price point, you can be in the 200s or the 500s, 600s. As long as the house is priced according to the condition, that it'll sell in a weekend. I mean, it should. Right?
Yeah,
there's obviously some outliers out there, but one of those ways is post-possession. Post-possession is basically whenever a seller is permitted X amount of days or months or weeks to be in the home after the home is closed. So I've seen some very aggressive sellers say, hey, I won't sell my house unless I have a minimum of 60 days, 30 days, to find my next home. So that's an easy way to help sellers, put them at ease with that transition. It's, giving them an extra 30 days, 60 days to find their next home, right?
And that's easy, right, too, because if they have somebody trying to buy their house with a low inventory, a buyer is going to be a lot of times more accepting of a longer close of escrow on that house because they can't even find a house to buy.
Exactly. Buyers that, the type of buyers, the type of offers that my clients are having to make to get their offers accepted. I can tell you right now, if somebody said, hey, I need an extra 30 days, 60 days, before, I can give you keys, my buyers would be okay with it because they, depending once again on the house, it has to be a good solid house and priced right based on the condition of the house to make sure that you can have that level of activity. And that's why it's important to make sure that you're meeting and talking to a good real estate agent that knows the market, that knows how to price a house based on the condition of the house, so that way you have this type of activity. One of the big issues that a lot of sellers come across is they overprice their house because they have agents that are telling them, hey, I can get you this much for your house, because they're just throwing numbers out there
just to get the contract on that.
And it's not about that, man. I have difficult conversations with my clients, and I say, hey, you know what? This is what the market is asking for. This is what your house is worth. And at the end of the day, if you overprice it, it's not going to sell as fast. We're not going to get those aggressive offers.
And also, if you list it right in this market, they're probably going to get offers that are going to go above and beyond that anyway, so you don't have to go that way.
Exactly, man. Yeah. And so that's one of the biggest concerns right now that sellers have is, hey, how am I going to transition into the other house? So, and that is one of the best ways to help put them at ease when it comes to that. And then the second, I guess, would be is how much they're going to make from the house, right? And a lot of people think, and then this is going to be huge, is they think that they have to take all their money from the house and then put it into the next house, which is okay if you want to do that, if you want to keep the absolute lowest monthly payment possible, but you don't have to do that. You can buy a house, your next house, with just 5% down and prepay your mortgage insurance. And talk a little bit about that, man. How does that process work?
So kind of how the handoff works is Rio's going to do your consultation with you if you're a seller on your house, and he's going to say, okay, based on this, you're probably going to net about this much money. Then Rio's going to put you in contact with me. And then basically what I'm going to do is I'm going to evaluate your whole situation. I'm going to go, hey, you're netting this much money. A lot of buyers think they got to put 20% down to get rid of PMI or mortgage insurance, which raises your payment. You really don't have to. You could put as little as 5% down in a lot of cases, sometimes 3%, depending on your circumstances. And then you could prepay the mortgage insurance in a single premium. And what mortgage insurance is, it's an extra insurance payment you have every month that raises your payment. Well, if we prepay that could lower your payment by, $100, $200, $300 a month in some cases. And then that's actually putting you in a bigger house where your payment may be almost staying the same or going up a little bit. And then what I do as a consultation is we look at your overall picture. We're going to go, hey, you got all this other debt here. Let's pay that off, right, when you sell your house. And then you're lowering your overall payment when you're actually upgrading into a new house versus what your current situation is. And the nice thing is I'm going to make sure you're bulletproof 100%. You're going to be pre-underwritten by our loan coordinator here before you even get your house listed, and we have a game plan for you. Because a lot of you buyers are sellers that are turning, sellers and then buyers are nervous that you're going to get stuck with a contract on your house and you're going to have to sell your house, and then you're not going to close on your new purchase and you're going to be homeless. But that's also the contingency in the contract that's going to protect your seller too, right, Rio? Like if something fell through ever.
Yeah. So just real quick to touch base on that, what you were saying as far as putting the 5% down and saving some of that money. I mean, that's a big deal if you've thought about, if you let's say, you're able to profit, 60 grand, 75, 80 grand on a house, and you only had to put 20, 30 of that down.
Yeah.
On your next house, like my sister's going through that right now, and you're actually helping her with the loan right now. She bought her house in 2014, and she refinanced it, took some money out of the house, and now she's taking that money to buy her next home because she didn't want to go through the contingency process, right?
Yeah.
So she basically, she's now under contract on her next home. She's renting her current home, but she did a short-term lease. She's now going to want to sell that home, right? So there's a lot of different ways to try to make it work to that way you're not having to do a contingency, because a contingency, essentially what that is if you're a seller and you have to sell your house before you can buy your next home, you have to put that in the contract, which is going to add another level of difficulty to getting your offer accepted. So being able to do some of these more creative things, or another way that you can potentially come in more aggressive and not have that anxiety of not getting your offer accepted and stuff like that.
Exactly.
But having the money, and that's a big thing too, man. And that's a conversation that we have with clients all the time. Once you already have prepaid your private mortgage insurance, putting an extra 20 grand towards your house is only going to drop your payment about 100, 110 bucks a month.
Yeah, it's nothing.
It's not, so once you've gotten rid of that PMI, because most people think you got to put 20% down, right? Would you agree?
Yeah.
So if you can buy a house with only putting 5% or 10% down, at that point, if you prepay the private mortgage insurance, it doesn't make a whole lot of sense to put an extra 20 grand. I have that question all the time,
Yeah.
I'm sitting down with my clients, I give them the monthly payments, and then they're like, well, I have 10 grand saved up. What if I put that 10 grand? I'm like, it's going to save you 50 bucks a month. And what can you do with that money?
Exactly. And that's because the rates are so cheap. So the good rule of thumb that Rio's saying is, like, for every 10 grand, it only lowers your payment by $50, basically. Yeah. That's a good rule of thumb. It's not exact, but yeah, that really helps. I mean, it's the most important thing is, like, contingencies are possible. You don't have to be nervous about it. Like, literally, you just got to have a good team that's going to make sure you're not one of those nightmare stories where you're trying to sell your home and then your purchase falls through, or the sale of your home falls through. You got to make sure you're just having a team that's going to button everything down and ask all the right questions.
Having a good lender on your side, man, is huge.
Agent.
Yeah, agent, lender. I mean,
agents that want overpromise how much you're going to net on the house to give you pie in the sky. They're going to be real and tell you this is what you're going to net. Like Rio does it on a conservative side, and then if you get more money, you're actually happy. It's a bonus.
It's a bonus, yeah, man. That part is a big, that right there too is a big part of getting your offer accepted as well. Is having a good loan officer that's going to pick up their phone and answer when the other agent calls and asks, hey, how solid is this buyer, because I'm considering your client's offer. And there's been times where, Jason has been able to help seal the deal because of that conversation that he's had on the other side, on the listing side, because these agents, they want to make sure that they're accepting an offer, that it's a solid buyer. They want to make sure that it's not somebody that's going to lose precious time on the market for these sellers, because those sellers are more than likely trying to buy their next home, right? It's a domino effect. So
exactly.
So having a lender that's willing to really go up to bat is a big deal, and it makes a big it plays a big role in getting your offer accepted as well, man.
Same with Rio. Your negotiating's on point, man. You get a contract accepted. But yeah, appreciate it. If you guys ever want to talk, there you go.
Yeah, man. Appreciate you. Thank you, guys. Have a good one.
Thanks.